Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? I hope you're doing well. We're going to teach you a little something today. So we're financial advisors. We like to teach. We teach our customers about their investments, their net worths, their personal finances. We'll do anything to help educate and grow our investors' knowledge base. And I want to share some of that with you here today. And I'm going to take a little time and try to go through this. If you have comments or questions, or if I happen to missay something, and you want to rag on me a little bit, that's understandable because I got a lot to say today. I'm going to try to do it rather quickly for you here. Now, I want to talk about the dollar. The U.S. dollar is sort of a misunderstood investment. A lot of people get this one wrong, and maybe that's a topic for a different video, but today I want to talk about how the dollar's been performing. So if you have been paying attention to this, what's happened since really about this time last year, the price of the dollar has done this. Now, granted, it's been sitting near highs, so the performance was good, and for the last year, not a whole lot has happened. You might not care, but recently the dollar broke out to new highs, right? So everybody's looking at this in the investment world and going, hey, that's good news, right? Strong dollar, go America, right? But what does that mean for your investments? Well, here's what that means. If the dollar is strong relative to the yen and the Aussie dollar, the Canadian dollar, and you get what I'm saying, the British pound, things like that. What that means is that companies here in the States, companies that get a lot of their revenues from the United States will benefit the most, okay? So anytime something happens in the markets, you want to use that as, is that an opportunity? Is that something I can look at? Can I do something with that, make a profit with that, invest in something that'll make a profit? And when the dollar gets strong, if you believe that's going to continue, then your mindset from now on, this is the lesson, you go domestic revenues. What companies are domestically getting, what companies are getting most of their revenues here in the States, okay? Now, there's a couple ways you can go about this. So let's take a look at this. Let's say you go, all right, I want to invest in the small cap domestic stocks. These are companies all over the United States, smaller companies. These are not your Amazons. Amazon's all over the place. But you want to look at companies that are getting these revenues from the United States. And a lot of times you're going to look in, I'll give you a hint, the Russell 1000, right? Some of the Russell 2000. Yeah, I mean, let's just put 1000 here to make it simple, right? I'll give you both of them just in case you want to do a little more homework. Russell 1000. So you're probably familiar with investing in the S&P 500 because you read a book and it said, buy an index fund, set it and forget it and never look back. I really don't like that. Because in this case, there may be an opportunity here in the Russell 1000. Now, you've got two ways that you can do this. If you're going to look for companies that have a lot of their revenues here in the States versus a lot of revenues overseas. I'll cover that in a second. But there's two ways that you can go about this. If you want to look at the Russell 1000 or the Russell 2000, you can look at ETFs, right? And just go the lazy man route, which is not saying that's a bad thing. That's just what we call it. Buy an ETF, set it and forget it, and be on your way. If you like the ETFs, you can look at the IWM. Not that this is a recommendation. This is just the most liquid and most popular Russell 2000 ETF that's out there. So by participating in that, you're getting a broader mix, of course, 2,000 different names. But we're talking about the Russell 1000. That would be the IWB. In the Russell 1000, what happens here is you're essentially buying one product, and you're going to get companies that have the bulk of their revenues here in the States, which would benefit from a strong dollar if that continues. Now, in the IWB, about 74% of it is, the average company in there has 74% of their revenues coming from the United States, which means dollar continues to go strong. Those companies would benefit. About 26% of their revenues come from overseas. Now, why is that a bad thing, right? If the dollar is really strong here in the States, then people that get a lot of their revenues overseas, they're not participating in this strong dollar. They're getting hurt over there, right? And so companies like Coca-Cola, Caterpillar, Intel, they all reported what was called, in this last earnings season, they reported what was called, they call them currency or foreign exchange headwinds. That's a fancy way of saying we're getting screwed on the currency here. Strong dollar relative to everything else. It's just a fancy way of saying that, okay? So one thing you can do to participate here is, like I said, use the IWB, and that's going to give you about 74% of the revenues that are generated by the companies inside of here are going to be here in the States. The other thing you can do is go look for individual stocks. A little bit more homework, but some of you guys like this stuff. I know you love this and you eat this stuff up. What are the benefits of doing all this homework versus the ETF? Well, you could pick right? You could choose your individual sectors. You could say, Dustin, I just want to be in the financials. So I'm looking for, think of this analysis here, if the dollar stays strong, I'm looking for the Russell 1000 stocks here in the financial space that maybe get most of, if not all of their revenues here from, U.S.-based business. You could say, oh, Dustin, I like consumer staples, right? I'm sorry, I didn't write that very well, but I can't go back now. You could say, I like consumer staples because you know what? Maybe the dollar does stay strong, everything looks good here and continues to do well, but what if the economy gets a little weak? I like the backing of that consumer staples sort of category. You could say, Dustin, I like tech, right? And so this will help you sort of fine-tune it. If you buy the IWB, you're just along for the ride. If you prefer a particular sector, that's one reason you may go choose individual sectors. So stocks, let's give you a few examples. These are 100% not recommendations, but in the financial space, you got Sallie Mae, ticker symbol SLM. Sallie Mae is, at the moment, it's up like 23% year to date. I don't know if you care about that. Good sales, good earnings, everything's looking good. If they get 100% of their revenues from here in the States, and if the dollar continues to do well, maybe they'll continue to do well. What else do we have here in the financial space? SunTrust. I know SunTrust. Well, this may be a bad example. So SunTrust, they get a lot of their revenues, all of their revenues here from the States. However, they're merging with BB&T. I'm not up to date on that merger, so just know that this is an example of something that you can kind of look at like that. What if you go, hey, Dustin, any discounted stocks? I'm a guy that likes to buy a dip, right? I see everything going well. I get the argument you're making here. Do you have anything for me? Wells Fargo. Wells Fargo gets all of their revenues here from the States, and it's only up a couple percent for the year. They've been beaten down a lot, rightfully so, but they've been beaten down a lot. In the consumer staples space, consumer staples, if you don't know what that means, my dad used to kind of word it this way. He would say, consumer staples are things that people are going to drink, they're going to smoke, they are going to poop, they are going to hopefully wash their hands. So this can be companies like that. Unfortunately, there's not a lot of those in the category that would fit some of that criteria. But let me give you a few examples. Kroger's a big grocery store chain. You probably have one by you somewhere. Kroger gets 100% of its revenues from here in the States, as does CVS. CVS Caremark, that's the corner drugstore thing in there. They've been beaten down a little bit right now, but maybe the strong dollar, if that continues, will help them. If you like tech, this is tough. So tech gets a lot of their revenues from overseas. This one's quite difficult, actually. In my research, what brief research I just did, I really only found Zillow. And Zillow's kind of a tough one right now, but they get 100% of their revenues from here in the States. Now, let me talk about this real quick. You go, okay, if someone is getting helped in the markets, right? Strong dollar, good for domestic stocks. Dustin, I get it. Whatever stocks make a lot of their revenues here in the States have a good possibility of doing well. Who's going to get hurt by a strong dollar? It's the people overseas that get a lot of their revenues from overseas. I got some bad news for you. It's a lot of tech names, right? So if you're invested in some of these really popular tech names right now, they could be hurt by the dollar continuing to get strong. Texas Instruments, very popular name. A lot of people invest in that one. Qualcomm. Now, Qualcomm's done really well lately, right, after settling their deal with Apple, which was a cool story in itself, maybe we could cover. Jabil Circuit, a lot of semiconductor stocks get a lot of their revenues overseas. Jabil, where's Jabil? 91% of Jabil's revenues come from overseas. 97% of QCOM's come from overseas. NVIDIA, 87% of NVIDIA's revenues come from overseas. I know a lot of you like that, NVIDIA. Booking Holdings, that's actually not even in the States here. Las Vegas Sands, 83% comes from overseas. So you get what I'm saying. There's some areas that you would need to look, do a little research, see if it's something you want to participate in if you notice the dollar continuing to be strong. Now, the goal of today was not to give you a stock recommendation. The goal of today was just to explain kind of what's going on in the markets, right? We like to teach our customers. We teach how things are happening. When something's about to change, I will walk people through it. The whole drop from October, November, December, I walked all of our customers through that entire drop, not just like sort of rubbing their back saying, oh, it's going to be okay, but actually walking them through it and say, hey, listen, if we hit that 20% mark, that's where we're going to speed up. That's going to be some support for us. Here's what historically happens. And I love doing that stuff. So if you feel like you want an advisor to help you, walk with you, help teach you along the way, maybe you'll keep us here in mind at Jazz Wealth, SEC Fiduciary Registered Financial Advisors. And that's all I have for you. I'll wrap it up. I hope you learned something today. If you did, maybe you'll hit the subscribe button. If not, I guess I understand. I probably messed something up, but I'll try harder next time. See ya.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.